retail sector gearing up for a very big week of earnings, kicking off by Walmart last week. The sector has now underperformed, though, the broader S&P so far this year, but stocks could see a boost as we approach the holiday season. Joining us right now with her picks on retail is Karen Short, food and staples retail analyst at Barclays. Good morning to you.
Morning. Thanks.
We obviously saw Walmart last week. We have had a lot of analysts come on the show and say the stock to buy that they like is actually Target. What do you think of that?
So I guess my take is that you don't necessarily have to pick one over the other.
Okay.
I mean, when we launched at Barclays in 2016, Walmart was our top pick, and I think 80% of analysts who covered it had an equal weight or an underweight on it. And we've stuck with that and think that there's significant upside to the story today. And I'll deviate to Target in a second. But when you think about Walmart, it's trading like a Staples name, and that's kind of the analogy that keeps coming up. Well, Staples names are trading at 15 or 16 times EBITDA. Walmart's at 11. So if it's going to trade like a staple, maybe people should start considering valuing it like a staple name. The flip side on Target is there's still a pretty meaningful multiple gap between Target and Walmart. And Target is only 1 quarter into having strong same-store sales growth combined with gross margin expansion and operating margin expansion. So to the extent that we're like early stage on Target,
so you look at the operations
of
of Target and now put it and think it's comparable to what's happening at Walmart.
Yeah, I mean, we've literally only had 1 quarter of both of those dynamics happening, gross margin expansion and operating margin expansion. And Walmart is kind of 5 quarters into that. So I think there's still a lot of doubters on the Target story. And so there's upside from that perspective.
Is there one that you actually like ahead of everything else right now?
I mean, Target's definitely up there on our list. I mean, we have an overweight on both, but Target, I think, has both the upside to numbers and upside from a multiple expansion perspective.
As I always say to people, if I gave you $10,000 and you could only buy one stock, what would you buy?
Target is on the list, definitely. I mean, I have buys on both, so.
What are your other overweights? I mean, because we talk about Target and Walmart so frequently, but there's a huge retail world out there.
Yeah, so we have overweights on Walmart, Target, Home Depot, Lowe's, Best Buy. Those would be
Best
the
Buy too. That's interesting.
Yeah, Best Buy.
Even with the tariffs, because that's been the one that it's a little harder to slide through any of the tariffs because almost everything they sell has the potential for getting tariffed.
It is, and I think the thing with Best Buy is that my whole tariff viewpoint is that any retailer who tells you that they can pinpoint to the dollar what tariff impact is going to be is not telling you the truth. And basically, Corey is telling you the truth, which is that it's very hard to pinpoint what the actual impact will be. But when I look at Best Buy as a story overall, I look at their ROIC, which is in the 20s, least adjusted ROIC. It's trading at a multiple that is below Kroger, and it has core operating profit that's growing. It is on that metric, like ROIC relative to valuation, the cheapest stock in our coverage by a long shot.